Hello everyone, welcome back to the Metalshub. Today we are going to talk about something every investor, jeweler, and market watcher is talking about right now: gold. Yes, the yellow metal is once again shining bright, touching fresh record highs, surprising traders, and making everyone wonder what's really happening behind this big rally. Over the last 1 month, gold has delivered truly remarkable gains. In the international market, gold touched an all-time high near $4,380 per ounce, and on domestic side, rupees 1,32,000 per 10 grams. That's not a small move. It's a historic one. For long-term investors, it's confirmation that gold remains a powerful hedge. But for short-term traders, it's also a moment of confusion. What's driving this? Will it continue? Let's go step by step. There are 7 key reasons behind this surge in gold prices. Each one connects global trends, macro data, and investor psychology. So let's quickly go through them. First, weakness in the US dollar index. Another major factor is the dollar's weakness. Normally, when the dollar falls, gold automatically benefits because gold becomes cheaper in other currencies. And right now, with global inflation cooling and rate cut expectation building, the dollar index has slipped from its earlier highs, giving gold an extra tailwind. Second, tariff uncertainty. Trade related uncertainty has also made headlines again. Concerns around new tariff and policies between major economies have led investors to move money into safer assets. And gold is the oldest safe haven of them all. Then, third is geopolitical tension. The world has seen constant geopolitical flare ups from conflicts in Eastern Europe and the Middle East to concern in Asia. Each new headline adds an element of risk, and gold always reacts quickly to such events. Even rumors or rising defense spending can boost safe haven demand. Then, fourth, continuous central bank buying. Central banks across the world have been steadily adding gold to their reserve. Countries like China, India, Turkey, and several emerging economies are leading this trend. They are doing it to diversify away from the US dollar, to protect against the inflation, and to strengthen their balance sheets with hard assets. This steady buying has quietly absorbed a huge part of global supply of gold, keeping prices supported. Then major factor is expectation of Federal Reserve rate cut. This is a very powerful driver. Investors are betting that the US Federal Reserve will cut interest rates soon. When rates go down, the opportunity cost of holding gold, which doesn't pay interest, reduce. So more people prefer to hold gold rather than cash or bonds. That anticipation itself drives fresh buying interest. Then strong ETF demand. At the same time, exchange traded funds backed by physical gold have seen net inflows after many months. That means institutional and retail investors both are turning back to gold as safe assets. Whenever ETF demand rises, it reflects a shift in sentiment. People want stability when they sense uncertainty in markets. Then last, weakness in USD INR. And the USD INR rate has its own impact on Indian gold prices. Even if international prices stay stable, a weaker rupee means gold becomes more expensive in India. Over the last few weeks, INR has stayed under pressure, and that's the amplified domestic price. However, after such a big run up, we are seeing some short term pullbacks. So, for investor and traders, this is the time to stay alert, stay informed, and understand what's driving the price instead of just chasing it. I'll be explaining each of these 7 factors in more detail in upcoming videos. So, if you haven't already subscribed, make sure you subscribe to the Metal Sub. Hit that bell icon so you don't miss our updates. Thanks a lot for watching. This is the Metal Hub, your trusted source of for smart insights on gold, market, and global trends. See you soon in the next video.